So we'll give you access to this, but the first number, this 485 that you see, that is going to be money from your W-2 wages. So if you both have a job and you get a W-2 form at the end, both of your numbers are going to be added together and be put on that line. And you can clearly see that it says statement 1. So all the tax return, if they can't fit the pieces on the tax return, they're going to have statements. So when you request the tax return from your spouse, you want all the statements. You want the entire tax return, not the first 5 pages that they think is so important. So then there's a bunch of other things on this page, including taxable interest, which you'll go down, and that's the $39,455. And that's going to be interest that you earned on some other holdings. Okay. So if you don't know what you have, if you're earning interest, it's going to be reported. If it's earning dividends, it's going to be reported. If you have, you can see here, a pension and annuity, it's going to be reported what the taxable amount is. Social Security benefits, are you taking them? It's going to report it. So these are kind of the beginning things, but I don't need you to know how to read a tax return. I need you to know how it gives you information that then you can put on your property statement. So the first one is the statement 1 is going to tell us what the wages are for each person, and that's going to be helpful in understanding the income. If you can get 3 years of tax returns, we want to see how has the income changed over time. Did it go from here and burp, 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 it's going down? The court is going to recognize that they are doing that on purpose. But a lot of times if you have a job, have you guys ever gotten like they take your pay away? Well, maybe in the pandemic, but for the most part, you're going to get a raise and it's going to keep on going up. So that's all I want for this particular one. So I'm not even going to go through any of this. I want to go straight to, so here is some deductions. So this is also going to tell you a little bit of information about like your house. Okay. So maybe you don't have a mortgage statement and they're not giving you access or you're not paying the mortgage. This is going to tell you some information about your real estate taxes, which your real estate taxes are calculated based on a percentage of the value of your house. And so the real estate assessor is going to have a value for your house that they're then calculating your taxes. And so you might be able to back into what the perceived value of your house is. This is also going to tell you if there were any other taxes paid or the interest and everything on the house. Okay. It could also be there's mortgage interest and points. So that's going to be important. And you can see it says see statement 11 and there were mortgage interests or points. So again, we don't know what that means, but we know that you did something with the mortgage. Okay. So you either refinanced a mortgage, you either paid points and got a new house, or there could be some questions in there because you're typically not going to pay points unless you're at the beginning of a mortgage. Okay. Like you're usually not going to buy down the rate in the middle, or it's rotating and it's like, so it just creates that you have a question. What did we pay for that was reported? Did we do something? Okay. Now this is where it gets good. This is where the interest and dividends are being listed. So remember, we had that whole list of interest as a total of $39,455. This is part of how we got that interest. So what this is telling us is every single bank, so you can see WSFS Bank. I don't know what that is, but that's $38,000 is being interest on that. So just like a random 5%, like let's say they're making 5% interest on that amount, right? So basically they are making about $38,000 on some hypothetical amount that's sitting in that bank account, right? So if that equals 5%, you would take that 39,000 and divide it by 0.05, and you now get 780,000. So an initial assumption could be that they're making 5% on that money. Now, is that rational? If it's really just sitting in a bank and making like 1 or 2%, no, that's not rational. If it's really sitting in some other investment account and it's making 10%. So again, a financial person is going to give you a reference point on how to pick that percentage and then what it could mean about the value of that account. But at a minimum, you would want to list these accounts and you can see Massachusetts Mutual and how we have like 1, 2, 3, 4, 5, 6, 7, 8, whatever. Those are probably different accounts at the same institution. So again, you're not listing it as one. You would take this list and you would literally enter this into your property statement and then just say you don't know what the value is, right? And so you need them to clarify the value, but you've already done your due diligence of saying, well, I at least know we have these 4 different bank accounts, right? The same would happen at the ordinary dividends. But the ordinary dividends are usually where you're receiving like a 1099. Even this interest is going to be a 1099. So the W-2 is your wages. A 1099 is going to be income from somewhere else that is from an institution. Okay. So you might request W-2s, 1099s, K-1s. Those are going to be 3 of important things that you request in your discovery. So a couple other things. Now we get into, this is where we see income or loss from partnerships and S corps. And you see these 2 corporations listed, and they also have an S near them, right? So that's going to, if it's a P, it's a partnership. If it's an S, it's a corporation or an S corp or an LLC, okay? And then what it says is, you can see that it says A next to the CELT Corp, let's call it CELT Corp, and then B next to the GIA Corp. So if we go down and you go to the next box, you have passive income and loss, and it says A, B, C, D, D again. So that means that if you go to that line B where you see the 4,115, that says it's oh God, I can't even read it. But basically it's income that you are, it's non-passive is what it should say, income from a K1. So that means that company B, the GIA Corp, had income of $4,000 and they should have a K1 that would represent that income. Now, interestingly, the other corporation doesn't have anything in there. So that could mean that it's not making money or it's a startup or some other issue. You would still be listing any of the ownerships you have in any corporations in this list. Okay.
Melissa, I'm going to pause you really quick.
Yes.
So is this kind of where, because a lot of these high conflict spouses are going to say, oh, that business made no money this year. Like, oh, don't worry about it. It's a failing business. So is this where they should be kind of looking for that? Or
this is going to be taxable income. Okay. Taxable income has nothing to do with the actual income to the business. Write that down. Taxable income has nothing to do, but it's an indicator of what they are reporting as income. Okay. So at a minimum, they're reporting 2 companies that they have ownership in. And so maybe you didn't know them. Like sometimes people have investments in like companies that they've given $50,000 to somebody and they're now a 2% partner in a company and their spouse has no clue about it. Mm-hmm. Right. So again, you're just using your tax return to get an idea of what you own. And so that you can even request subpoenas or do something. So this at least has 2 companies that we need to consider. One is making money, one may not be. Typically, if you see 2 companies, one is going to be an operating company and one is going to be a real estate holding company. So it makes sense that one might not make a lot of money and one would. That is actually a tax process that is widely used, that the rental, like a business with a piece of property doesn't make any money or it makes no like negative money. And then you have an operating entity that makes money and they balance out and you don't pay any taxes. So it's a tax process. But in this, at least we want to put those 2 entities on our property statement and ask questions about them to verify if they are still owned. And that's why you want to look at like 3 to 5 years of tax returns, because typically people are planning at least a year in advance. Even like they're just thinking of getting divorced a year in advance, then they start doing a lot of things. You may see a lot of movement in those past 3 years. So you might want to go back to before things started to go south. Because if there was some sort of infidelity, that could have been years in the making. Okay. And so then you kind of want to go back before the infidelity, if possible. But either way, we're just looking at a tax return. We don't know how to read it, but we're just listing these things that are on there. Now, a couple other places. Now, this goes into the statements. Remember, we wanted to know where the statements were. You can clearly see, and they're listed on the bottom here, statements 1, 2, and 3. They are at the back of the tax return. They are going to be additional details that you need to know. So what does this say? Now, at the top, it's going to say T or S. T is the taxpayer. So it's the first name on the taxes. S is the spouse. So that's the second name on the taxes. That's as simple as it is, right? Whoever's listed first is the T. Whoever's listed second is the S. So this shows how much they were paid. So clearly one person was paid more than the other, what tax was held, and things like that. This initial amount paid is basically your gross income that you're going to use for how you calculate maintenance or alimony and child support. Okay. It also then tells you in statement 2, the IRA distribution was from Wells Fargo. So again, we might want to put Wells Fargo because obviously there's an IRA at Wells Fargo. Okay. Not a lot of money, so it might be small. Now we have the pensions and annuities. Now look at what this tells us. TIAA Administration Services LLC is one of them, and the Office of Pensions is the other. The Office of Pensions might be like for the president kind of stuff. But anyway, so those types of things are literally telling you. Now you're going to list TIAA Administration Services. Even if you don't know what is in there, it's telling you a lot of details about your financial situation, which you claim you don't know anything about. But we've told you, control what you have control over. You have control over getting, at a minimum, a transcript. And it's also going to list all of this. It's just going to look a little bit dirtier. It's still going to list the right information. So now this gives us a little bit more information, not really too much on here other than the fact that this is going to be important. The middle part says that they paid some estimates for taxes. And so a lot of times in the divorce, if we're getting divorced, we're like, is there any money owed? Is there any money due to be received? Many times people, well, you want to know whether they took the prior return it didn't come out, like in 2022, if they got a refund, did they just roll it over into the next year? So those are things that you're kind of paying attention to. So you might have a question for. Now this goes into any of the state and local taxes that were paid. Okay, typically then that means that you received something from them. So we might have to ask questions about this community college. Okay. And then the cash contributions are going to be places where they've given money. Now, you might look at those and say, okay, are any of those, suspicious or not? But usually it's not going to tell you too much. But obviously where you have given money. This gives you a little bit more. Now, this is great. Okay. Mortgage interest and points. Well, we got M&T Bank and we got TD Bank. That means either one of those or both of those are your mortgage. So what if you got a line of credit on your house? What if you got a HELOC? Any of those, you could have two banks. This could mean that you refinanced. But again, you are not here to try to figure out what this means. Your goal is not to guess at anything that you don't know. You will ask that in court, okay? Or you will ask that as part of your settlement offer. Real estate taxes also. Now, what this could mean is that you have two different properties. Now you're paying real estate taxes to two different places and two different properties. So again, we want to clarify, is it one property? Did it exchange hands? What happened? Now we go into some of these other pieces, which you'll have the state taxes afterwards. This is in the state of Delaware. Why do we pick Delaware? A lot of businesses are encouraged to pick Delaware because of the, a lot of reasons. Anyway, it's not necessary. This is going to be the state, and this is going to be how they allocate per the state the income to each person. There is some information on here, like what the state taxes are, or if there was any putting money in. Usually the state taxes is where, like, if you put money into your 529 plan or like a kid's college fund, you're getting state taxes taken down, not necessarily federal taxes. So you might see that replicated on here. Okay, so there's a bunch more stuff on there, but I'm not going to continue on that. I'm going to show you what a K1 looks like. And this is going to be the one document that should, in theory, be added to the tax return, or should be a part of the tax return. So if you're not getting it, or you didn't receive the K1s, you need to request them. If they have an ownership in a company, a partnership, or anything that files its own tax return and is not listed as Schedule C on your own personal tax return, then you will get a K1. The K1 is going to have information about distributions. Distributions, you can see if you go to the right column, the furthest right column, and you go all the way down, there is a box 19 that says distributions. This is a K1 for a partnership. A lot of people are in partnerships. If they're like professional doctors, lawyers, things like that, it could still be a partnership. A partnership is Form 1065. So you look at the top of the business tax return and you figure out what it is based on if it's 1120, 1065. This is for a partnership. You're looking at box 19, distributions. If there is a number in that box, that means that your spouse received cash or some sort of compensation or benefit, and from that, like they paid some expenses for them, and that is not reported on your tax return. So this is where, when you're like, oh, I live in $1 million mansion, but we're only making $100,000. This is because you could receive distributions from a company, and that is going to actually not hit your tax return. So it's additional cash flow. So really, in a divorce, we're looking at cash flow as well as taxable income. Okay.